All right, guys and girls, we'll go over this for the umpteenth time. I got a lot of questions about this. This chart goes from 1872 to 2018. Let me make sure that we're getting this. Yep. All right. So if you're looking at this, you can see that if you wanted to never lose money in the stock market, this is the secret. Okay. You've got your arithmetic mean, which is 8.4%, and your geometric mean of 6.8. Now, this is adjusted for reinvestment of dividends and adjusted for inflation. So you can see that if you're long-term in the market, you're going to make money. You're not going to lose money. But if you're constantly, in and out, trying to trade, trying to time tops and bottoms, you're going to eventually lose everything that you have. It's just the way it happens. So the whole key to this is don't expect to do this quickly. Year to year, the S&P 500 can fluctuate pretty wildly from gains from one year to losses, in the next year. But within time, if you give it time, all that choppiness that you see on a day-to-day basis, it all evens out. And the chance of losing money over longer stretches of time, it goes down. All right. So if you manage to hold out for 5 years, your odds of losing money are pretty slim, even if you just got in at the top. This is what I'm trying to explain to people. If you can wait for 20 years, your chances of losing money are pretty much nil. All right. Well, the market can be volatile. Okay. When you see these occasional bear markets pop up, like we're in one now, long-term investors, really, if you haven't been in it long enough, you underappreciate the value of time. The longer you're in, the better your chances. It's just how the market works. All you have to do is look at all your big billionaires that are investors, and this is what they do. They're long term. It doesn't matter. Warren Buffett, he's in his 90s. He's thinking 30 years from now. He ain't going to be around for 30 years, but he still has that mindset. He's not like, well, I got to make a trade before I die. That's just not the way it works. So why do so many people continue to lose money in the stock market? Well, it comes down to lack of patience. I stress this day to day to day. It's like, why, everybody's got to have it now. I gotta make money right now. You have to compartmentalize this. Your investment portfolio is not meant to be your personal, banking account where, well, I got a car payment. It's got to be totally separate. Eventually, maybe you have to, live off of it, but hopefully by then you've got a good enough size portfolio that, you can live off whether the dividend payments or, continue to trade it or just sit and let the money come in. There's so many different things you can do, but the first things first, if you can't adopt a long-term mindset, then just forget it. Get the fuck out of the market because you're gonna lose money. I'm telling you. It's not. There's people out there that are making a lot of money trading, futures, options, but the big but is if you're trying to trade one lot, you're going to lose money. The more you trade, the more positions that you have or the more contracts that you have, the better your odds of winning, which means you have to really margin a lot. Okay, unless you've got millions and millions of dollars, your chances of winning in the options game long term are slim. Okay, I don't have the numbers. We'll go into that on another one. But it's just not a winning proposition for you. Now you can use it to hedge. You can use them for, establishing positions, but on smaller accounts, just forget it. Your chances of being successful are really, really slim. We're talking like less than 1% of the people actually make it. All right, let's see here. So if we looked at how your annualized total returns would fare over various time frames. So we look from 1 year. Now I've basically been posting online trying to help people realize this, try to educate people to understand the value of time. Now 2 years went by pretty quickly on Twitter and well, I've only actually been hooked up with tip ranks for about, since November, so about 6 months. And you can see the returns there. So we're actually, still within that two year for people to actually see what's actually going on. But I've been trading for over 30 years, so I understand. So I haven't lost money, and I can prove what I'm doing. A lot of these folks out there, well, you got to take the good with the bad, and it's like, yeah, well, show us what you've done over your entire career, because you'll have somebody that comes out and they've been trading for 6 months, and they're going to throw up big numbers, but they can't show you any bank statements. They can't show you any. They don't want to show you anything because they don't have it. Whether I can't say because some people make stuff up. Just you have to do your due diligence. You have to investigate these people. Find out. The best thing is just invest, 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 invest. Anyways, so let's just take in 1 year over from this 1872 to 2018. In 1 year, you can go from negative, what is it down here on the chart? Negative 37 point, or negative 37%, right? Loss. And that looks like it was 2008, right? And this is only up to 2018, so we're missing 2 years off here, but this is the earliest one, or the latest one that I could put together. And looks like a maximum of 53, so that would have been like 1952 or maybe 1936, somewhere in there. But anyways, you can see the highs and lows on the chart. That's in a 1 year time frame. So now you go from a 5 year time frame. Now you go, your smallest loss would be on average, right, a negative 11.7 to 28.5 on the high end. And on a 10-year, you go from a negative 4.1. So you're looking at an average of 10. So you take any 10, put them all together, right? And 10, from 10 to 10 would be 4.1, negative 4.1. That would be what you'd be down, unrealized, of course, to 17.6 on the high end. So just add up 10 of these, or 10 of these, or 10 of these, 10 of these, and average them out. And the best that you would get would be 17.6. So over 20 years, right, you have 0.05 positive, right? So no losses, and to 13.2, 13.2% on average. So if you take those and you see what I'm doing, okay, I'm targeting 12%, right? And I'm saying we want that 12% per year. So if we have a negative year, but we still don't have any losses, where are we at? Let's just say we have an 8% year, but yet let's just say, I don't know, we go back 10 years, right? So we should be somewhere between negative 4.1 to 17.6 return. So if we just look at the last 2 years, we're about 15 point something. So we're within that structure, right? Now, this is, basically will show you the longer that you're invested, the better your outcome is going to be. Now, if you take things into your own hands and stop letting other people do things for you, you'll concrete that fact because you take away fees and everything else. The fees aren't put into this, what I'm showing you on this chart. Fees like management fees from brokerage services, investment advisors, things like that. And you know, if you all you do is strictly invest, in 20 years, your chances of being profitable just over from 1872 to 2018 are positive. It's a positive outcome. So, and the probability of making money runs up to 94%. So, if you're going to be invested in the stock market, you got to give it time. And also, what goes along with that is you have to have a plan. Okay, I'm showing people on a day-to-day basis, and the clients that I have that are involved that understand what's going on here. Okay, so looks like we've got what is it, 0.77 last month. We'll go over that more once we get the monthly update from Interactive Brokers on that single account that I show everybody each month. So we're trying to target, right? So this is profit, projected profit per year. If you just get the 0.77, would be 9.21, right? Take you 7.81 years to double your money. So if you can do this, if you can double it once, and then you can double it twice in 20 years, if you had, let's say you had $10,000, you put no more money into the market, and you double your money in 7.8 years, well, if you got the same return that next 7.8 years, 7.81 years, you double your money again. So instead of, you'd have 10, which would be doubled into 20, at basically 8 years, and then that 20 would be 40. It's that simple. So 14 years, or make it 16 years, just if you did, and this is a low month, right? So we're targeting 1,400 a month. Say 1,074.95 is what we made this month. That's dividends and profit from trades. Okay, so you can work it out, get your own calculator out, and figure out what your, if all you did was pull in dividends, you definitely be, it's about half, right? You can see a little over half. Oh, that phone call here. Hold on. And yeah, so basically you got to stop thinking short term. If you're working, I get it, you know, you put some money towards it, start small and work it. You just have to have a plan. You know, people that are making more money can put more towards it, but that's not always the case. I just read some article today where people, I can't remember what the percentage was, but people that are making $250,000 are in debt. They're living from paycheck to paycheck. Think about that. I'm debt free, and it's just astounding that somebody's making $250,000 and they're working from paycheck to paycheck. We're in trouble, right? The market's not going anywhere, all right? They're scare you to death, but if you're impatient and you don't have a plan, you're going to lose money in the market. You know, it's like Buffett always tells people, it's like, well, you know, if you put $1,000 into an index fund and just let it sit there, you know, 50 years, you'd have X amount of dollars, you know, whatever, you know. But if you want to take control of your finances, you want to learn something, like I can show you how to do it. But a lot of people, like I say again, don't have the patience, and they're going to continue to look for the get rich quick schemes, you know, the lottery tickets, all this type of stuff that, you know, you hear about all the time, and you hear about on social media, so and so made so much money, and it's like, great for him, you know. But, you know, do you ever hear about them again? I've noticed a big downtick in the amount of people that are posting their winnings, right? Because a lot of people either had to go back to work or don't have enough money to continue to play the game. I don't play a game. I'm investing. You shouldn't be playing. If you treat it like it's a business instead of treating it like it's a card game or some, casino game, then you'll make money long term in the market. But stay with the dividend paying stocks, stay away from the damn growth stocks, stop following the idiots that are, the Jim Cramers of the world that are trying to steer you into products they want you to buy. Do your own due diligence, understand what's going on, learn it. If you're having trouble, just send me an email. I'll send you to some good sources. You got to get your head right. You've got to think long term. But everybody, you got to understand there's always risk in everything. But that's why there's a return in the market. The higher the risk, the more the return, right? But there's a point when, the people that are telling you to buy options, when there's a time decay, or especially with options, if you're buying anything, you're going to lose that money more times than you're going to win money. So that's, to me, a gamble, and that is speculation. And speculation is not investing, so don't get the two confused. Same thing goes for futures, commodities, any of that type of stuff. People get lucky all the time. I get it. You walk in, you put your $2 down, you win $1 million, you win 50,000 on a lotto. Hey, it's just luck. That's all it is. There's no skill involved in that. But if that's the way you're handling the stock market, good luck. But that's my little rant. Hopefully that helps some of you out there to concrete it in your head. And I tell you what, it's going to take, because Americans are so brainwashed into thinking that everybody's making all this money in the stock market. It's not the case. There's a very few that are actually pulling money out of the market, and the people that are the people that are investing, because the rest are paying these people that are investing. That's just the way it works. So if you're lucky enough to come across this, stick with it and just watch and see what happens. Long term, long term goes by pretty quickly, and you'll figure that out once you pay more attention to your money and understand how to make money with money. But that's all I got to say. Later.